Hello everyone and welcome to today's video on Bitcoin and its current correction. I hope you're all good guys and not too afraid in these red days, these blood bleeding days. Anyway, I am CF Crypto TA, also known as Crypto Dunk, and let's dive in on the Bitcoin structure and what is going on. So, what we have here, as you know, we always start with the high time frame. I told to you already a million times, we have wave 1, 2, 3. We just close the first one and we are in the wave 5. Now, every wave, which I counted to you, so wave 1, 2, 3, and so on, has their own subwave inside. So if we go and break down and we go in a lower time frame, we can see here 5 waves. We can already see them here if you look very closely. One here, two, up, three, four here, and then five. Okay. Nevertheless, so knowing that each wave has 5 subwaves, we know that we are in different impulsive wave also on the last one. So we have the wave 1 here, as you can see here. This is wave 1 of the primary wave 5, the retracement. And now we just conclude, and I will explain why I believe we just conclude the wave 1, and we just finished yesterday the second wave, the corrective wave of the intermediate trend. Okay, so now what we can see, first of all, we have the 50 MA here, the one dotted, the dotted line over here, and we can see that has provided before a good strong support. We also saw that on the weekly we had a fake out before. Here, as you can see here, there was a fake out. This one over here was a fake out, and here we are similarly going through the same um, path. Okay, so we just touched the 50 MA, and we didn't touch it. We broke it if we look on the daily. However, a lot of people is turning very bearish. I'm not. Okay, now let's have a look what trend line we can draw from here, because trend line are important. We know that we have a different also horizontal um, important zone. So like here, this one was a really important zone, and it's still an important zone. And if you see, this one would be categorized as a retest of the broken close, highest close ever in this case. Okay, so this one was the highest close ever before the breakout over here, and now we are retesting. Okay, so this to me looks pretty bullish. This one looks like a perfect adding spot. Okay, now I know we are currently below. Even if it goes slightly below, like it did here, like slightly below here, and then push back up. This one was a fake out, and it's a strong indication that bears have tried to push the prices down. However, they fail and they exhaust their power. So they don't have any strength left, and the bulls are ready to push prices higher. Now let's have a look at the trend line, the diagonal trend line, because also this one is important. We take the low of the wave 2. This one was wave 2 of the primary trend, and we connect it with the wave 3 of the current trend. So if we see over here, this is our major strong trend line. Now, when we look at the Elliott wave, it would be better to use the line chart, because Elliott didn't use all the candles and the wicks. However, I like to use the wicks of the candles. So these price swing over here, you can see, because he provides us a more precise support zone and resistance zone. and also where the prices will likely to touch. However, now what we can do also with Elliott wave to understand where Bitcoin with the Elliott wave theory, where Bitcoin is moving, we can create channels using Elliott wave principle. And how we can create channels is by connecting the wave 2 with the wave 4, so the bottom of wave 2 and the bottom of wave 4 together, and then a parallel line, so a channel which is touching the top of wave 3. In that, using this technique, we can basically have a rough idea where the top will come in. So when we touch the top of the channel, that's probably the top of the move setting in. Okay, so let's have a look. If we do like so over here and here, so this is our channel. This is our Elliott wave channel, and you can expect that anything touching the channel over here is our top. Now I know it looks like crazy. That's very high. Now what else we can use Elliott wave theory with? We can look at the possible um, targets by using the quality principle. So in the quality principle, it talks about two of the waves are very likely to be almost equal in length, with one which is extended. Usually the extended one is the third one. As you can see here, this one was really extended compared to this one. So for a lot of people study obviously Elliott wave theory, and also Elliott wave give indication on price, not price target, like how to set up targets. We can use the Fibonacci extension tool, and how we do it, we basically anchor the beginning of the bull trend, so of wave one. We anchor it with the high of wave three, so the top of wave three, and then we touch the end of wave 4. Now in this way, we're going to look at the 0.382 and the 0.6818 as possible targets. This one because it would be basically, you need to do wave 1 and wave 2, and is multiplied by 0.618, and this one is our target. Now likely, usually, this length over here is equal to the wave 1. This is because we're using the quality principle of Elliott wave. So the most likely scenario is usually wave 5 to finish on 0.618. Now if we check, 0.618 is 190k. So this one exactly in line with the target that I was talking about before with you guys, and I've been yelling at it from I think July, not July, not even July, earlier in June. Okay, so this is my target. Now, obviously, we did this using the weekly chart, but if we go lower, we will be able to be more precise. So if we go on the daily, we can see that the channel is not touching properly, so we can adjust that. Uh, so if we adjust it over here, okay, we can see that we are touching around this area over here. So perfect. And we can do the same here, and we can also have an understanding, and we can imagine where maybe the bull market will end. So Here it says 4th of December. I don't believe it was 4th of December. I checked it earlier, and it's 14th of January. There we go. So somewhere around here, this is January, end of December. This one was already my target before. It can likely extend. It doesn't mean that he has to. And also another principle that Ralph Elliott talked about is that to find the top of wave five, we need to um, connect the top of wave one with the top of wave three. So these one are the two line which give us the likely, the possible targets for wave five. So when Bitcoin will reach the first resistance line over here, we will need to be careful because we might be in for a reversal. And the same when Bitcoin will go up and touch the channel over here. Okay, I'm still sticking to my 185. Sorry, 180. That's because I move it. 185 target for Bitcoin. This is because I really strongly like the 0.618. I found that it works really well in general. So, and also if we see this one will push us through to June. I don't think it will push it through to June. I think there will be an exhaustion move here. So we go up, we touch the channel, we push very strongly up, and then just fall down like crumbles. Okay. Now, with that said, let's clear the chart. Okay, so we had the possibility to look at what was happening in terms of in the macro picture. Now let's dive into where are we now. Okay, so we have also here we need to look at the different possible supports. We have the supports over here of the previous uh, high, okay, and then we have obviously the support over here, but we're not even gonna look at it now. Um, and then we need to draw the trend line, the support trend line here, which is over here. So we can expect Bitcoin to maybe touch again this support trend line over here. We can also draw the resistance line from here. So when Bitcoin will break above this resistance line over here, we know that there will be an acceleration in price, okay, upwards. This one is traditional finance um, technical analysis. I use a different range of techniques, as you can see, Elliott wave and so on, volume analysis and blah blah. Now, if we look also another resistance line, we have the previous resistance over here. So right now, our resistance of concern is this one over here. So when we break this one, we will likely break also the other one, and we push above and we start moving again. Now, knowing that this one is the wave one of the new of the wave three, which is the most violent of all. So this one was a retracement. And what Elliott explained to us, Ralph explained to us, is that usually wave one retrace between the 50%, so zero point 0.5, and 0.786 of the Fibonacci levels. So we can expect in some sort of way the price to retrace to maybe 0.5. However, I will explain to you as we go along why I believe this is not the case. Okay. Now let's have a look, and we dive even more in to understand what is going on. Let's change chart, and this one is the one that I already prepared. Bam. We have our support line as I showed you before, guys.
We have our support line over here, the long one. Okay. Then we have I break down all the current wave with our Elliott wave breakdown. So we have wave one here, two, three, four, which is here. The end is here. This one is because I use the line chart. So four, five, and then we start the correction, which I was caught in the motion. I thought that the correction was ending here, which is not too bad because it's still we are around that level. And we have A, B, C correction. We have another A, B, C correction, which if you look on the bigger picture, this is basically a flat, expanding flat correction. And then we know that when we have an expanding flat, what happens is we have a three wave down, a three wave up, and then a five wave down, which conclude the correction. And here we have the five wave down, which I also highlight. You can see it here. I know it's a bit messy, but because there are a lot of information in this chart, we have one wave, wave one, wave two, three, which yesterday I counted here. However, today I reposition it because I did a further breakdown. I went in the 15 minutes chart. Wave three, four, and then five, which conclude our retracement. So I believe, guys, that we are setting the bottom. This is the bottom, guys, and I am buying, guys. I don't say 100% sure, but 90% sure that this is the bottom, guys. We just saw the bottom. We have a retracement now, and I will explain you why. Now we can see also the same thing I talk about Ralph Elliott. We have another correction over here. This was an A, B, C. Was a zigzag correction on this minor wave counting. And then here, interestingly, if we go on the hourly, we can see it a bit better. We had here an Elliott wave triangle correction. So A, B, C, D, E, and then push down. Okay. This is our Elliott wave triangle, bearish. And then here we have set the bottom. So now, as I said before, what is the target for the Elliott wave on a five-wave counting? We know that the Elliott wave is 0.618 of the sum between the wave 1 and wave 3. So 0.618 is touch 54,847. Sometimes, obviously, there is a truncation, which is basically it was pretty uh, precise. So we touched the 55.6 level, which to me it counts similar to 0.618. So this is the bottom, guys. We just had a nice reaction here on the 4 hour with morning stars, which is a bullish candlestick pattern. I always like to see also bullish candlestick pattern. We see a strong move down, which is with a lot of volume. However, we had a quickly built up, which had put in place a good reaction. You can see the difference between the reaction here. On this reaction, there was very little volume. Here we start to pick up really quickly. This is the volume is expanding. Let me check. We have 1 minute left. The volume is expanding, so the bears are pushing strongly. They're trying to push the price as far as they can, but they get rejected. The bulls are able to pick up the supply. There is enough demand, and it's pushing back up the price. Now, another concept is that the correction usually travel between 100% and 127%. So this level over here of wave A. So wave A in this correction, I know there are a lot of waves, but the wave A is this one. If we look at in a bigger picture, wave A is this one, goes all the way out to this wave C. Then we have wave B here, and now we are in wave C. Okay, so this is the 120% level, and it's the 55 300 level. So these are a confluence of different